Elna, let's have a look at this mining data now. June total mining output up 4.2%. This is quite good. Okay, it's coming off a set of really bad data over the last year or so, maybe even longer. Gold output, though, down 4%. Non-gold output up 5.3%. And platinum's bouncing back a little bit, again off a really low base, but some signs of encouragement here.
I think that if we look at it maybe on a quarter-on-quarter basis, seasonally adjusted, just to get rid of some of the monthly volatility, then the numbers are even more encouraging, a very nice 7% on a quarter-on-quarter basis in real terms. But unfortunately, these numbers were really driven by the platinum sector. So you'll recall in the first quarter we had all the strikes, all the safety-related stoppages, etc. And so a very nice bounce in this industry on a quarter-on-quarter basis in the second quarter of more than 20%. However, you have referred to these base effects, which are really important in these numbers. So if we were to look at total mining production in real terms again, for the first half of this year relative to last year, we're looking at a 5% contraction. If we look at this relative to, say, prior to the recession, then again, we're still well below these levels, almost 10% below those levels. And if we really want to think about the importance of these numbers in terms of employment, etc., then it's these comparisons that really matter. So yes, some encouraging signals, yes, a little bit of a recovery after some of the specific disruptions in the first quarter, but unfortunately not really good if we compare it in terms of where we have been, and then the implications for employment still not great.
So another question is, how sustainable is this improvement? As you point out, we're still catching up from those pre-recession levels, and it seems like a long-term secular weakness in the sector.
Absolutely, and I think that a lot of the recovery that we're seeing in the second quarter is really just a recovery from the first quarter's production disruptions. And unfortunately, it was really in the second quarter that the global outlook started deteriorating again, etc. So yes, these were recoveries from our own problems, but now we're confronted with the external problems, and unfortunately then the outlook can't be great for the mining industry or for any export sector for that matter.
Elna, I was just looking at you mentioned jobs and how important the manufacturing and mining sector is in terms of creation of jobs and maintenance of jobs in South Africa. And the jobs data we had out last week, I think, showed that the mining sector created something like 31,000 new jobs. That's encouraging. That's people being employed. I don't know if that's endemic, rather a situation where people have been sacked and then re-employed. But whatever it was, I think there were some new jobs being created as well. And I was talking to somebody in Australia yesterday at their mining conference called Diggers and Dealers, and they said that there was a general air of sort of quiet confidence about the mining sector, and that China wasn't falling in a heap and that things were going to get better. When you see these numbers, these quarter-on-quarter numbers and the jobs numbers that I've just alluded to, do you also get a sense of cautious optimism?
I think in the South African case, what I would say is that we probably don't have a lot of downside risk from current levels unless there is a severe, deep, renewed global recession. In other words, if I look at our private sector employment numbers, which are really the important ones in this context, then they've been moving really sideways since the recession, after those job losses that we had during the recession, with modest increases in job creation. So the fact that we are still well below pre-crisis levels of employment, to my mind, suggests that companies have been quite cautious after the recession. They have gotten rid of all of the labor that they probably don't need anymore, or think they might not need under very dire economic circumstances. And so probably not a lot of downside risk from here. And that has obvious implications for retailers and consumer spending, etc. But I'm not convinced that we're going to see massive employment creation from here. My analysis suggests that most of the job creation that we've seen after the recession was really created in the public sector, government, in other words.
Related to that, Elna, if we can go back to the whole question of policy support, government support for the mining industry, the safety-related stoppages come from Section 54. So you could argue that if you speak to lawyers working in the field, it's rather aggressively and inconsistently applied. So perhaps not much support there. If you see the comments and suggestions coming out of the ANC policy documents, the SIMS document, and talk about enforcing beneficiation, for instance, although it has its merits, it's not always realistic if you look at what it entails. Your feeling on that?
Absolutely, and I think unfortunately the way in which the ANC sets policy create very long lags in terms of the debates. If we think about nationalisation, probably no investor expected wholesale nationalisation, but unfortunately the discussion is still ongoing, and there is still some possibility of nationalisation in one form or another. In other words, not wholesale, but some intervention from the state. And if it's not nationalisation, I think it is more likely that there might be some fiscal intervention, maybe a little bit more taxes, etc. And at the bottom line is just, we don't expect nationalisation, but if you have that uncertainty, you cannot expand capacity, you cannot employ more people. So unfortunately, it has these consequences.
Elna, we are looking forward to the 1 o'clock figures, the manufacturing data for June. We can't obviously speculate too much on it, but we can sort of give an idea of what it might be, given that the fact that the Purchasing Managers Index, the PMI, jumped from its level of below 50 the previous month to I think it was 51 or 51.5, and the reading in the last couple of weeks. Do you expect anything more, the sort of optimism we've been talking about in the mining sector to be transferred to the manufacturing sector as well?
Yeah, I think a little bit of volatility. So we'll have the June manufacturing data, and that might ease a little bit from the 4.2% year-on-year growth that we had in May. You've referred to the PMI index. In June, it dipped slightly below 50. So this might reflect in today's numbers. So maybe a little bit of easing. But as you've mentioned, we then had that little bit of recovery in the PMI to above the 50 threshold, above which we typically have an expansion. And so in July, there should be some encouraging data from the manufacturing sector. But overall, again, I think the manufacturing sector is a story of, say, 3-ish growth, or maybe between 2 and 3% growth over the short to medium term, despite all of this volatility underlying the numbers.
Elna, thanks very much for joining us on Power Lunch this lunchtime. That's Elna Moolman, who is the economist at Renaissance.